This question, Mel, has come from an old paper. I suspect it's an old 7126 paper. I can't find any links to it online, but we'll go through it anyway because it's a useful exercise to do with the statement of financial position, specifically figures that will appear under current assets and the capital account. So it says here that Mel is a sole trader. Her bookkeeper is in the process of completing the financial statements for the year to 30th of April 2020, and they've got the following balances remaining in the books of account. And since completing the draft income statement, you can see there that the draft profit was 27,860. The bookkeeper has discovered the following omissions and errors. So we've got to sort these out, and then we've got to prepare extracts from the statement of financial position showing the current assets and the capital sections only, taking into account these adjustments 1 to 6. So what we'll do is go through that, and then we'll decide what needs to go on to current assets. So let's start with the first one then. It says on the 30th of April, Mel deposited £10,000 in cash from her personal savings into the business bank account for business use. This had not been recorded in the books of account. So we're going to need to add £10,000 to the capital account there. So that will be shown as capital introduced on the capital account. And we are going to need to add £10,000 to the business bank account. Okay, so that's number one dealt with. Number two, during the year ended 30th of April 2020, Mel had taken goods for her own use from inventory. The goods cost £2,400 and would have sold for £3,600. This had not been recorded in the books of account. Now be careful with this one. It says she'd taken goods for her own use from inventory, and this is misleading because it leads people to start making adjustments to the inventory figure. Remember, inventory is a calculated figure. It's arrived at by counting the inventory and then valuing it generally at the cost price unless there's a problem with it. So when we do goods for own use, you must remember to take it out of purchases. So that will actually increase the profit for the year. So we've got, remember the selling price is irrelevant. It's just at the cost price. Wouldn't be fair to charge the owner at the full retail price for goods they've taken. So we're going to add 2,400 to the profit. The reason we're doing that is that the 2,400 would have been deducted from purchases. That would have reduced cost of sales, and in turn would have increased the gross profit and the profit for the year. But we also need to add 2,400 to the drawings. So goods for own use there. So drawings is going to be increased by 2,400. On the 30th of April 2020, Mel had drawn a cheque for £350 to pay a worker for helping with the stock take. The bookkeeper had debited this to drawings. Well, it shouldn't be in drawings. It's perfectly legitimate business expense. So we're going to take it off of profit, so minus £350 from the profit figure. And we're also going to take it out of drawings because it's not fair to include that as drawings. It's a business expense. So profit goes down by £350, so do drawings. On the 25th of April, Mel had purchased goods costing £750 on a sale or return basis. These had not been recorded in the purchases account, but as they were on the premises on the 30th of April, they had been included in the closing inventory. On the 8th of May, the goods were returned to the supplier as they'd not been sold. So we don't have to worry about selling. It's not selling on a sale or return basis, it is buying stuff on a sale or return basis. So the £750 hasn't been included in purchases, but it has been included in inventory. So we need to take it out of the closing inventory figure that's going to appear under current assets. But don't forget, there will also be a corresponding adjustment to the profit for the year because inventory is going to go down by £750, therefore profit will go down by £752. So if inventory goes down, cost of sales goes up and the profit goes down. So that's that one sorted out. Number 5, included in the closing inventory were goods costing £800 that had been damaged. The selling price of the goods would have been £1,200. Well, that's academic. The goods can be, so we can get rid of that. The goods can be repaired at a cost of £100 and can then be sold for £850. So if we take the £100 away from the £850, the net realisable value is £750. We compare that with the cost. Remember, don't do anything with cost. Ring fence that number. No need to adjust that. That's a factual amount. That's what was actually paid for the goods. So the difference is £50. We need to reduce inventory by £50. So again, we're going to take £50 off of this closing inventory figure on the list of balances. And for some reason, I've decided to take that off of the wrong one, the drawings. I do apologise. Should be off of there, the £50 closing inventory figure. And we're also going to have to reduce profit. So remember, if inventory goes down, profit goes down, same as it did for the previous adjustment for goods for own use. Okay, so that's that one dealt with. And then on the 28th of April 2020, so just before the end of her financial year, Mel paid rent of £900 by cheque. The payment covered the period from the 1st of April 2020 to the 30th of June 2020. No entries have been made in the books of account to record this transaction. So she's made a payment of £900. That needs to come out of the bank account. Okay. Now we need to split the £900. Part of it belongs to this year. So £900 is for April, May and June. So it's for 3 months, but only one of those months is only April. So a third of it, which is £300, needs to go into the income statement. 2/3 of it, though, is a prepayment. So £600 needs to be included as a current asset. So we're going to reduce profit by £300. So profit for the year, let's put that in there, minus £300. And then current assets, we've got prepayments. We're going to need to add £600 in there. Okay, so the workings are a little bit scrappy, but let's see if we can pull all of this together now and answer the question. So we've got the current assets. So if you remember, current assets always start with the inventory. Then we go for trade receivables. Then we go for the bank account, provided there's money in the bank, it's a debit balance. And then we have prepayments. And then if there is any, we have cash right at the bottom. We haven't got any cash, I don't think, at the moment. So the inventory, if you remember the inventory, we had 21,700, but we took off 750, which was the sale or return goods that didn't belong in there. And we took off £50 in relation to the damaged goods. So inventory has got a value of 20,900. Trade receivables, we had trade receivables. Did we have any trade receivables? I'm not sure we did. So we just put a dash in there. Looks like there are no trade receivables. Perhaps she doesn't have any credit customers. The bank balance, we had 1,075 in there. We paid in 10,000 and we took £900 out, rent check there. So the bank has got £10,175 left in it. And then the prepayments, what did we have there? We had 450 and we added another 600, so £1,050 in there. So 20,900, 10175 and 1050 means that our current assets total 32,125. Just as a note, prepayments really should go before the bank and cash, but it's not really going to be the end of the world with this one. Capital account, we've got the balance brought forward. So the balance at the 1st of May 2019, so that's the figure that was given to us over here, 38,600. Remember, we need to show that £10,000 separately as capital introduced. Don't just go and chuck it in with that balance at the 1st of May. It wasn't there at the 1st of May. It was actually paid in on the 30th of April, the last day of the financial year. So let's add that £10,000 in there. Now the profit for the year, we had an original figure of 27,860. We had the goods for own use, so we need to add £2,400 back to that. And we had the 750, which was the sale or return. We had the £50 for the damaged goods, and we had the 300 was for the rent, and then the £350 was the money that was paid to the worker. So the profit now is going to be 28,810. And then last but not least, we've got to take the drawings off. So the drawings started at 21,800, goods for own use of 2,400 to add on, and then minus the 350 that had been unfairly charged to her, the money that she'd paid to the person that helped with the stock take at the end of the year. So drawings are now 23,850, and if we total that up, 38,600 plus the 10,000 plus the 28,810 minus the 23,850, our capital account balance is now 53,560. Job done. Thanks very much for watching.